All right. Good afternoon to everyone. Welcome to today's episode of the SFF, aka Singapore Fintech Festival Green Shoots series. My name, as you all probably know, is Gabriel, your host once again for today's session. In fact, this is the second last one of the year. For those of you that have been with us for the last few months, thank you so much for the support. And for those of you joining us for the first time, welcome. Never too late. Right. Green Shoots by SFF touches on a spread of topics in the fintech space and is, by the way, supported by Temasek for 2020. Now, quick announcement, please. For the Singapore Fintech Festival, just a quick reminder, we are back again in November. In fact, 8th to 12th of November, speakers and agenda are now live on the website. So do check us out. And by the way, on that note as well, tickets are also available. Early bird rates going at $50 only. And especially for this year, something we've just launched, for an extra $10, yep, just $10, you can take part in our Global Knowledge Certification Program in Web 3.0 this year. All you need to do is watch some of the selected sessions, answer some questions, very simple multiple choice, pass, which is the 60% mark, and you'll be issued an official certificate issued in conjunction with AIDF, which is the Asian Institute for Digital Finance, NUS, and Group, MasterCard, and many more. To find out more, just visit us at fintechfestival.sg and all the details will be there. All right, and now on to the topic of today, which focuses on sustainable finance, in particular, how bridging sustainable finance and the real economy through technology. Sustainable finance and ESG investing have quickly risen to the top of the priority list in the financial sector as countries redouble their net zero efforts and investors seek positive ESG impact through their investment decisions. Now, at the same time, the various industry sectors are also embarking on their own sustainability journeys to transit to more sustainable practices and demonstrate their ESG commitments. Today's panel will discuss how different industry sectors, whether you're in construction, agriculture, how is all of this working hand in hand with financial institutions to explore innovative solutions that can bridge sustainable finance with tangible, measurable ESG impacts on a sectoral level. By the way, today's session is also open to online Q&A, and you can send your questions via Zoom's Q&A function. Now, if I can just introduce the panel very quickly, Eugene, we've got Eugene from Surbana, Jurong, we've got Karunia from UOB, we've got Paul from Green Pass, which is, by the way, part of Olam's international venture. We've also got Ted from Evercom Singapore, and taking us through today's topic, we've got the lovely Miss Shireen Fogg, who is basically going to be moderating this entire session. By the way, Shireen is the practice lead for sustainability services in Singapore and drives the local efforts in KPMG Impact, KPMG's global initiative on ESG expertise, building for a sustainable and resilient future. And now, Shireen, panelists, over to you, please. Thank you.
Thank you so much, Gabriel. And that was a very, very kind introduction indeed. And thanks everybody for joining us this afternoon. Now, today, the stars of the event, of course, will be our panelists. And we are very excited, personally I am, to have them on board because I think they represent not just their organizations who form different parts of the value chain that we know is essential to work together for a more sustainable future, but also in their individual capacity, very passionate, experienced individuals who are bringing to you the best of their table in terms of the new concepts, designs, and ideas that are going to make it workable for all of us as we go on sustainability. Right. So I'm going to start off with a round of introductions so the audience can know the panelists better. And perhaps I'll start with Karunia from UOB. If you could share a little bit about what UOB has been doing on sustainability. And, we do note that you're from the Sector Solutions Group. And why is that such an interesting area for UOB to position itself as it relates to ESG?
Okay. For myself, I'm from the Wholesale Bank in UOB, and my mandate is to look at sectors, assessing megatrends and how they impact on our clients, and thereby coming up with sector-specific solutions to help address our clients' potential pain points. So sustainability is one megatrend that we see becoming mainstream, and based on that, within our teams, we look at the potential sectoral implications and how do we then solutions and roll out frameworks as well as sustainability products programs to service our clients more effectively.
Thank you so much, Karunia. It's really very interesting because I also had a personal experience of working with UOB several years ago in developing some of your frameworks. And I remember very clearly that was a very sector-targeted approach. And it's really encouraging to see how many transactions you have facilitated under that sector approach, and also then going forward from there, the number of new frameworks and different sectors that you're covering. So very, very well done. Okay, and now let's move on. And I would like to also invite Paul, perhaps for yourself to share a little bit of what you do.
Sure. Well, I'm lucky enough to be part of Orlam International Engine 2 Ventures team. As you know, at Orlam, it's a company that takes sustainability incredibly seriously. Our CEO, Sunny, is global chair of the World Business Council on Sustainable Development. And the company works hand in hand in partnership with hundreds of thousands of smallholder farmers around the world. And so we're very focused on farmer prosperity, and prosperity in a very holistic sense. This involves looking at the sustainable development goals that are impacted by farming communities and also the natural environment. And one of the things I'm focused on at the moment is our carbon footprinting at Orlam, and more broadly, a new venture that we're pioneering called Green Pass, which is really helping large enterprises measure and manage, in particular, Scope 3 emissions in complex supply chains. This is something that at Orlam we've been on a multi-year journey to do ourselves, working with a multitude of advisors, and we take it very seriously, and we think it's not easy. And so we're investing quite heavily in data science and machine learning and some tooling to make it easier, both for ourselves, but hopefully for others very soon as well. And so with that, I'm thrilled to be joining this discussion at MAS, not least because in the Green Shoots conference, because of MAS's very important support for sustainability and green financing in Singapore and beyond.
Thank you so much, Paul. And I think the real experience that Orlam had in trying to manage your own carbon footprint and emissions will be so valuable when the learnings are transferred to the rest of the industry. And that real agriculture and food will be one of the industries where sustainability is having a huge impact in terms of how it affects livelihoods and the way we live. And the other one, I think, would really be the infrastructure and the real estate sector, where supply chains are also a huge one. So can I get Eugene, if you don't mind, sharing a little bit of how what SJ is doing in this space? Surbana, Jurong.
Good afternoon, everybody. My name is Eugene. I'm in charge of several things in SJ. One of it is Sustainability and Resiliency Office, where I'm the senior sponsor there, Digital Management Office, as well as Smart Cities, where I'm the managing director. For SJ, we take sustainability seriously, and like the building behind me is our SJ campus, is pledged on the Sustainability Linked Bond. We are looking at because we are technical by technologists and technical by nature. We can do certification like Green Mark in Singapore through ways from the US, or including infrastructure sustainability from ISC Australia. So we have a very unique blend of technical people as well as technologists. So what I mean by technologists, we do have our own platform. It's called 24K, whereby we have we are monitoring, for example, 31,000 lifts and devices all around Singapore. We have a target 50,000 by 2025, as well as flexibility in managing pandemics. We have a pandemic management system as well, and I have to thank Orlam, who's also my client there, where we have the passes all. We were able to do analytics based on the passes, low energy passes that's given out. So in terms of looking at how we bring all these things together, and including fintech, we are building a platform that brings in all these three: the technical part in terms of certifying, the technologies part where we are looking at the platforms, and then having a certificate exchange part whereby we are able to look at how we can provide the exchange with blockchain, of course, to the various parties, whether it's a developer, a financier, an FI, and an FI to an insurer, and so on and so forth. So it's basically building a ecosystem that is not only vertical for the construction industry, but horizontal that can span across any industry, be it infrastructure or even logistics or transport. Thank you.
Thank you, Eugene. And I think so far, although Ted has not introduced himself yet, we can see that the circle itself is pretty closely knitted. And in some way or other, we all know each other and it's working off each other, right, in terms of our efforts. And we've heard from UOB, Olam, as well as from Surbana, Jurong. And we see that each of these corporates are actually bringing to the forefront a lot of their own thinking and technology. So let's take a look at what Ted is doing. Ted, from Evercom, how do you see your role in this ecosystem, and what are you doing in terms of bringing everybody together? Could you let us know a little bit more about Evercom and what you do?
Sure, it's a pleasure to be here. So my name is Ted, I'm the co-founder of Evercom. And a bit short about Evercom is we are IMDA accredited company and also Enterprise Singapore scale-up companies. What we do is we provide digital services to help these companies better manage their decarbonization goals. And we specialize very much on helping the small and medium-sized businesses. So we do have larger property groups, clients, and so on. But where we see the big gap in sustainability is really the hundreds or thousands of SMEs who at the moment are lacking behind in terms of digitalizations and also having a hard time to access green finance. So what we do is really to find a cost-effective way to help these companies to digitize their operation information. These could be their environmental related data. And then now we're working with the financial institutions in Singapore to see that with these information, how can we really reduce the barriers to be able to unlock more green financing opportunities with these companies so that they can also participate in the Singapore Green Plan and to be able to participate towards reducing their carbon emissions.
That's great, Ted. So there would be a lot of solutions that you have pushed out to the market.
Yes, so of course for us we focus a lot on the digitization aspect of it, but as we are servicing many different companies across different industries, we definitely have been building up our different partners, right, that can offer different types of solutions to the different scenarios that we see in the different industries.
Right, thank you. So today, again, with all the panelists and together with MAS's strong support, I think what we are looking at is this facilitation of growth that is going to happen in the next few years. And the topic today squarely being on sustainable finance and the technology solutions that are being used by the financial institutions and the real sectors to bridge that gap. I would like to kick off the discussion proper with a zoom into sustainable finance. So Karunia, being a bank, would you be able to kind of start off by talking a little bit about the transactions that you have seen in the market and across your different sectors of clients where you are servicing, right? Where have you seen the most tremendous growth? And what are some of these challenges that you are seeing?
Okay, maybe let me start off by sharing the frameworks that we have. So we have three vertical sectoral framework, the real estate sustainable finance being the first one, and that's the one that Shireen, you mentioned that you work with us to develop. Then we have the smart city sustainable finance framework, which cover the whole gamut from the construction industry to the waste management industry, as well as environmental adaptation, technology, so on and so forth. Third is the circular economy sector. So there we look at the full spectrum from the electronics to the plastic recycling to propagate the concepts of reuse, reduce, as well as recycle. Thereafter, we look at the horizontal framework, which is the green trade finance framework. And this dovetails exactly with what Paul highlighted just now, the importance of addressing the need for the scope 3 requirement as the sustainable finance need to enable the various stakeholders within any supply chain. So that as a backdrop, we then roll out solutions. And specifically to your question, Shireen, the most or rather the greatest momentum that we have seen so far is actually in the real estate sector. And we attribute it simply to the fact that most regulators, most governments today recognizes that the real estate sector is the largest emitter, in the whole universe of industries, right? So real estate, including the construction industry, actually contributed to 39% of all GHG emissions. And because of that, the regulators are more progressive in terms of introducing regulations, targets, so on and so forth. And that's also part of the work that we are collaborating with Eugene site, Surbana Jurong. How do we implement for example, in the Singapore context, BCA new requirements for all this embodied carbon? How is it to be measured, and how do players need to improve their footprint over time, right? So real estate has been a beneficiary of transparent regulations. On the flip side, when we first rolled out the circular economy framework in 2019, targeting the e-waste and the plastic recycling industries, to be completely honest, we only had a handful of adopters, right? And only this year, after NEA introduced clearer regulations and guidelines, then we see greater interest. So in that context, I just want to relate that the take-up of sustainable finance goes hand in hand with the transparency, both from the regulations as well as what our partners can help to enable, our clients' journey.
And I would tend to agree with that. Even in our consulting work, we do see that the regulations play a huge part in driving behaviors. And also, I think more than that, in terms of actually setting out the infrastructure where companies can achieve that is one of the things that they do. And then you mentioned, Karunia, that you worked with Eugene as well on some of these solutions. And that is a very interesting space because with the BCA's recent announcement on enhanced green mark scheme, we also have been getting a lot more interest from the real estate players. So Eugene, are you able to share a little bit about the solutions that you have that might be applicable?
Yeah, so you can think of a few. One of course, if I start from the top down, is a platform that's able to take in data, a common data environment. I think just now, there was the main mention that we need to have total transparency, and common data environments are the best to give transparency. So what do I mean by that? Let's say that we have a building and the banks want to know, let's say it's a term loan, short-term loan, how the building is performing, and straight away the banks have direct access to information because there will be IoT sensors there. There will be the platform is linked up to the IBMSs, so that this information is brought to the financiers in a readable way and not a engineering way. So they said, okay, with red, amber, green, things are going well. Let's say it's a long-term loan. Let's say it's a 10-year bond, sustainability bond. If the banks would be very interested to know whether they have give a preferential rate if the building is indeed doing better and better and better, right? And again, transparency can be given because the information will be provided. But I think the more important point is with the tightening of I won't just say green mark, okay, but the tightening of certification schemes around the world and the introduction of new ones. For example, UL has one that is on smart cities and sustainability and smart buildings together as one. USGBC has come out with one for true waste. They're challenging developers and buildings to have zero contribution to Pulau Semakau, for example. Yeah, that actually happened. So we should be working together as the Fintech team, the PropTech team, plus the Smart Cities team to see how we can really take that challenge on board and yet give the benefits whereby developers can get better financing. Banks also will be banks and insurance will be able to benefit from that, and basically the benefit is to go back to the buyers, where they will be buying a product that is sustainable and resilient.
And in your sense, would these solutions, I mean, whether they are real time or not, kind of fit into a system which allows for better monitoring and visibility, so that the financing around these products are also going to move in tandem?
Yeah, real time is definitely a need to, because if it's going to be after the fact, then what's the point, right? So what our solutions are looking at is having real time information, and also analytics as well. I have been put a challenge to say that, can you do real time simulations and analytics as well? So we are working with the National Supercomputing Center to see how, with Bernard and his team, to see how we can improve, that's not cloud computing, but HPC, high performance computing, so that we can give that edge to our customers, whether it's finances or to our clients like Olam in the future.
Great. And we talked a lot about this real-time data gathering, as well as being able to use that data to, I think, feed into some of the sustainable finance objectives that Karunia would have in extending the loans and financing, that so that, for example, UOB and other banks or financial institutions would have that level of comfort, right? And I'll imagine the building and the built environments would be very, very different from, for example, when we discuss topics of circular economy, which are more complex economic kind of models, or perhaps when we talk about food chains or agricultural chains. And I wanted to hear also from Paul, do you have the same kind of challenges or solutions in your sector that you think would be quite comparable in that sense, in essence?
Yes, absolutely. I guess if the vision of real-time, high-quality data, particularly in scope 3 of complex supply chains, was a vision of climbing Everest, then today at best we're at base camp on this, cross industries. We have now established global standards of gathering basic baselining and measurement. But measurement in and of itself is still not a solved problem. I think what we'll see over the next 5 years is a lot of rebaselining. And we will start to understand that measurement is actually a journey. And the journey is one of gathering more quality and granular data year on year consistently. And that will take a lot of effort. The second point is, the old adage is that what's measured is managed. But we would estimate that less than 5% of companies that have made their net zero commitments or signed up to science-based targets have any idea as to how they're going to hit those targets by 2040, 2050. So what's lacking at the moment is granular roadmaps for abatement, which people can bring back into a 2023, 2024 quarter by quarter target. And so to a certain extent, the measurement tools and techniques that exist today are good to get a basic sense of your overall emissions profile. But it's far from the granularity and regularity of data at the sort of quality that you would need to actually measure how you're doing quarter on quarter against your abatement targets. And that's because much of GHG accounting can be, and often is, based on global estimates of emission factors rather than real-time data sourcing from hundreds, if not thousands, of suppliers that contribute to these complex supply chains, 8 of which contribute over 60 to 70% of global emissions. So we at Olam have invested heavily in a tool called @Source, which really helps us to understand what's happening at farm gate and create product carbon footprints at quite a granular level. But to create an overall organizational scope 1, 2, and 3 comprehensive emissions baselining and ongoing management, measurement, and monitoring is something that needs to be enabled by tooling that can create visibility for all sorts of experts throughout an organization, not just the Office of Chief Sustainability Officer, but also the Office of CFO, CEO, but also business unit heads, etc., so that everyone can understand why certain numbers are moving in a certain direction and what we can do about it. And that's what we've been investing quite a bit of time and capability on. We're delighted about the fact that we're not alone in this journey, and there are many others who are also investing in the measurement and management tooling that's required for the future. So I think we can get there. We know what's required over the next 5 to 10 years, but this is an ambitious journey that all big businesses will need to go on, and it is a little bit akin to climbing Everest, not least because of the time urgency we all have, and to get this right, we need to all get this right in a hurry in order to meet the commitments that we've all signed up to.
And I would imagine for somebody like Olam, in terms of your carbon emissions, which profile or which scopes are you looking at that would be accounting for the biggest part of the emissions? Would that be scope 3 along the supply chain?
Sure. Well, I guess just at a more meta level, food and agriculture is one of the largest emitting sectors globally, and that's why we've committed to be absolute leaders in decarbonisation of this industry. It's absolutely vital that we work out ways together to have a food and agricultural industry that is less emissions intensive. And there's a number of things that we can do at farm gate to do with inputs, fertilizer, the type of farming, eventually soil carbon sequestration. There's many things we can do to do with associated deforestation and preserving the natural environment around agricultural practices. And then, of course, through the supply chain, there's many aspects that we need to closely monitor and continue to abate. And we need to do this in partnership with our people right through the supply chains. And the good news is the purchasers of the commodities that we supply, the likes of Unilever, Nestle, etc., are dead serious about providing much more sustainable food and products to end consumers, and consumers are dead serious about understanding the environmental impact of the food they eat. So there's actually a very strong role in the end consumers playing a role, and there's a very strong role in green financiers playing a role to incentivize and finance changes in behavior amongst smaller suppliers as well as larger companies that are willing to lead in this space. And it's absolutely doable. This is about commitment, which we definitely have. It's then about granularity of data and information, which we and others are investing in heavily, and we hope to help others through that journey through what we call Project Green Pass. And then it's about serious dedication to year-on-year abatement and the road mapping of that, and focusing on today's technologies and what's already doable, of which there are plenty, and then also investing in the technologies of tomorrow. In the case of food and agriculture, that can include new fertilizers and other techniques to better preserve and store carbon in soil.
That sounds like a lot of alignment and onboarding work, I think, would be necessary because we're going to be involving so many people within the organization and without, right? And later on, I'd like to revisit, if we have time, this entire concept of access to finance, because many of these solutions we are talking about, I think, conceptually at a corporate level or in cities or urban areas where it is more developed, it may be easy to deploy. And even then, we are facing challenges. And I just wanted to get your views later on, perhaps around how in less developed countries, right, where many of our the people are struggling with their daily livelihoods, or where access to technology is not so available, what are some of the solutions to them? But before that, perhaps I'd like to hear from Ted as well. And Ted, if you could kind of give your view on this common language that Paul, Eugene, and Karunia has been talking about in terms of ESG. What is that maturity in that space, and how do you think technology has been helping to solve some of these problems?
Yeah, I definitely agree with all the points that was mentioned by them. And I think when it comes to ESG, I think quality data from the sources in a more real-time manner is really the key to enabling, if we really want to do the sustainability transitioning over the next few years. So just to give you some example, in the pandemic, just this year itself, we have engaged more than 200 plus SMEs across various sectors. And even in the difficult times like now, we do see some of these SMEs, I think 30% of them are committed also to the sustainability agenda, right? So we do see interest from them to commit, but most of these companies, they don't even have the right data in place for scope 1, scope 1 and scope 2. Forget about scope 3 right now. Scope 3 to them is even way down the road. So what we are really trying to figure out is, how quickly with digitization, with IoT, we can really help make the data for scope 1, scope 2 at least available. And the quicker we make it available and the quicker we make these data align and in compliances to the different regulations. I think we do have a lot of the international standards are available. If we can make them available quickly and we can make them in compliances, then we can really help these companies to get the kind of financing they need to, in order to go green. In Singapore, it's a relatively small city-state, so we started with 200 companies. But on the other side, when we go to the neighboring countries, we're talking about millions and millions of buildings, right? Our kickstarting point in, for example, one city in Taiwan will be 20,000 factories already. So it's really important to see, how can we build a plug and play piece where we can get these data and then partner up with some of these bigger organizations who have a comprehensive platforms and so on that can do the financing and even the analytic. But the first step is really to get the data from the industry to these places, and this is where we really see that there's a big gap to be met.
Right, thanks, Ted. And earlier on, Paul mentioned that the role and the counterpart who is looking after or responsible for the oversight of this ESG data gradually will also involve key personnel within the C-suite, for example, the CFO. So in your interactions, maybe within your organizations and elsewhere, right? Who are the key people you're typically liaising with? If you talk about technology solutions, would that typically be the CTO, or do you think that there is a much bigger and greater awareness across the different functional heads to be leading this right now?
I can take that question, sure. I think, firstly, GHG accounting is in some ways a new specialization and a new practice area. So the first thing we need to acknowledge is that organizations are investing wisely and heavily in building high quality sustainability teams. And those teams often include footprinting expertise, data science expertise, but certainly at the very least, GHG accounting expertise. And that's a major new field. I think what's difficult is as these topics become symbiotic with sort of business imperatives, and so therefore, how do you translate some of the intricacies of this specialized field to office of CFO, CEO, etc.? And I think there's a long way to go to help create a common language in organizations that can cascade all the way down to people who are ultimately responsible for changing their business practices in a way that can help organizations go on abatement journeys. So at a high level, I would say organizations need to invest in specialized resources, but we also need to invest in demystifying and making those resources and that new specialty field more commonly understood across an organization. And then and we need new collaboration tools to demystify and spread the things that need to be done right throughout an organization. I would say that part of doing that is to create transparency as to how things are measured and how certain calculations are made, and rather than these things being done in a black box or being done purely by third-party experts. So part of the ongoing education and journey that organizations need to go on is to truly, in the same way people need to truly understand their accounts, their financial accounts, all the drivers of those accounts, and then cascade initiatives right throughout an organization to improve an organization's profitability. We have the same journey now that we need to go on when it comes to our sustainability accounting.
And I would agree with that, Paul. We do see a lot of that. In fact, it's really interesting because, for example, from KPMG, we, of course, traditionally has been very, very used to financial information, right? And when we come to this field of non-financial information, there are a lot of questions we have, but the skill sets in terms of assessing the quality of information still remains. And it is that new subject matter that we fundamentally need to understand in terms of, and that comes through from so many different portions of it. We talked a lot about the data and the matrix. And I wanted to bring this discussion back a little bit to sustainable financing. In particular, let's talk about one class of instruments which are very popular now around sustainability-linked loans, right? And just around the table, I would like to ask your experience around sustainable financing. How has it been? And, in terms of when it comes to matrix and targets, what causes you to regard whether a particular target is what we call good enough or sufficiently robust for you to be able to back it with the dollar, right? And Karunia, would you like to start?
Okay, I think you hit the nail on the head. SLL is the most challenging today for the simple reason, just now I was alluding to the fact that transparency of regulation, standardization of taxonomy is a critical foundation. And for sectors where you have those kind of transparency, then the structuring of SLL becomes easier because there is a clear pathway towards the required goals. So in the RE sectors, for example, with PCA standardized approach on required energy efficiency targets, we can easily scope that. For the less developed or less transparent sectors, it becomes very challenging, and banks typically will discuss with the clients, and usually we will use the client historical data as the threshold, and then set goals in the next couple of years for the life of the loan. Now, the challenge there, because under the SLLP, the Sustainability Linked Loans principles that is applied by the APLMA, targets need to be ambitious, and therein often lies the controversy, because to the client, a 10% improvement could be ambitious, but to the bank, it might not be sufficient, right? So that becomes an issue. And sometimes we have to basically drop deals or disengage from deals if we don't believe that the targets clients are committing to are sufficiently ambitious, right? So setting the SPT, the sustainable performance target, is one challenge by itself. Then under the principles, we also need to make sure, and on an annual basis, the outcome is properly monitored, reported, and verified. Now, verification, typical for banks, because the requirement is the verification must be done by an external and independent body. So for banks, typically we rely on the auditors of the client to do that. But the reality of the market today, there are practical difficulties, and that's where I think tech partners like Evercom, Surbana, and some others that we have worked with, to us will help provide that kind of technological solutions that helps both clients and ultimately the auditors as well as the bank to have certain discipline and certain transparency in monitoring systems and subsequent reporting of the impact.
I would agree there. We do get at KPMG, for example, like you said, a lot of requests for independent verification, right? And the methodologies that we are employing would be different. Right now, I would say that there is a shift from the very manual kind of verification that we are doing to thinking about, in terms of the data collection process, when we embark on more different kinds of platforms, how does that assurance necessarily look like? And I think also, how does it address some of the practical concerns around resources, time, as well as financials that necessarily comes with an audit. So it is a trend that I will agree with you, Karunia, that we are seeing a lot more of. And at the same time, in terms of performing an independent assurance, the other question is how do we go about assuring whether or not a goal is ambitious enough, right? And that itself has a level of judgment that is quite sometimes out of our hands, but sometimes regulations, legislations would give us an indication of where that benchmark or that level is going to be at. That's great. And Karunia, for sustainability-linked loans, do you think that they are essentially much better taken up as compared to other kinds of financial instruments in the sustainability space?
It is increasingly becoming more prominent for the simple reason that in our region, which is developing Asia, right? Most businesses are still transitioning, so they would not have obtained the necessary standard for green certification. So as corporates become more aware about the importance of sustainability, both from the potential regulatory implications as well as from the financing angle, where banks are increasingly educating the corporate clients that in due course, whether it's in the next 2 years, 3 years, risk return requirement for uncertified corporates will result in higher pricing, right? I think that anticipation is starting to raise awareness and to increase adoption. And as companies transition, they will need to start by using sustainability-linked loans before they ultimately reach the required certification for green.
And around the group here, and I'm just conscious that we do have to move with the Q&A very soon, but around the group here, would there be other experiences you would like to share in relation to sustainable financing, perhaps on your own organization or elsewhere?
Maybe a quick one from me to add to Karunia is that I'm also seeing a trend that they are looking at just our clients are not just looking at just one certification now. So there's a little bit of competition. They said, hey, I've just only done green mark, platinum, I'm green mark, platinum, super low energy building or net zero energy building, and not only that, I have Wealth International. So they are now just not one certificate. So I'm actually seeing a lot of in the market itself that there are multi-certificate international ones coming into Singapore, and I believe that is so number one, I believe that that's going to be the trend. Two, super low energy buildings in certain districts are the norm. That means you need the minimum is a super low energy building, which you're talking about 40% of energy efficiency savings, and it's this how should I say this stringentness in terms of the ratings and also the design for the building it's coming fast and furious, and the next couple of years is going to be quite interesting to see different types of designs for the urban sector.
Yeah, one maybe for me to comment is I think when we talk about sustainable finance, we should also we forgot one important players here, which are the governments and the international organizations. As you know, the topic of, for example, SMEs can be quite wide. And the definition from a Singapore government perspective is any company that is generating less than 100 million revenue a year, which can be quite big, some of them. So where we see is that, you know, even for some of these companies who could be turning over, you know, 10, 15 million dollar a year, they might not be, even with the data, they might not be so feasible for some product like SLL. But it's also important to see, especially with Singapore, that there are more and more sustainability related grants that are being issued to help to bring these companies to the level where then they can start to take on the sustainability linked loan to move forward with their growth. So I think it's also important to acknowledge that there's a certain transition between getting a company ready to a level where they can take on these more mature financial products to grow, instead of always relying on government grants for the small players to grow. So I think that transition is also quite important.
And for smaller companies, I suppose it would be challenging for them, for example, to put in the resources at organizational level. And therefore, if we can come to some form of industry support, the self-sustaining, of course, that would help, right? And also for the smallholders, I suppose, that Paul mentioned. Okay, right, great. I'm just conscious of time, so I'm going to open the floor up right now for the Q&A. And just to request for the audience to put in your questions, or perhaps to raise your hand to ask that questions if you have, of our panelists. I think we have one question from Dave in the audience, Mr. Dave Chew. And the question is, what's the potential of open banking in helping sustainable financing models? Right?
Okay, maybe I should take that, right? Because it's talking about open banking.
Thank you.
Yeah, I think we experienced it firsthand when we roll out the green and sustainable trade finance earlier this year. That was under the ambit of the MAS Green Finance Industry Task Force. And you know, and that also converts with what Paul was talking about just now when we look at trade finance being an enabler for the Scope 3 measurement and qualification. Now, we soon realized that we are only as effective as our outreach to all legs of the trade transactions. If all clients are banking solely with us, right, then it's an easy conversation, an easy solution. But typically, we will bank one leg, another bank, you know, banks the other leg of the trade transaction, and then if you trace the whole supply chain, there will be multiple banks involved. And exactly because of that, we then embark on the phase 2 of this greening of the trade systems by engaging with SG Trade Desk as well as with MES for the Green Print project, right? Now, so to answer the question more specifically, to us, it is not just talking about open banking, but it is talking about open ecosystems, because these actually require multiple stakeholders beyond banks to coexist and to partner into the solutions. How do the certification bodies who provide the certification for the goods or for the corporate entities, how do they pump in their information onto the MES Green Print platform so as to create a single source of truth for all the necessary ESG certifications, for example, which will then enable the various bank partners in the supply chain value chain to then tap onto this single source of truth to enable the transactional qualification, right? So it is beyond open banking. I would call it the necessity for open ecosystems.
This idea of open ecosystems, and I think we heard the mention of green print a few times now. Would any of you in the panel be able to share a little bit more about this green print initiative as far as you're able to, since it's in the works of MES, for example, or anything around your open digital systems?
Sure, I'm happy to. I mean, I think I wholeheartedly agree with this concept of open ecosystems. And I would add that Project Greenprint is a vital part of this vision. Effectively, what we're talking about here is making Singapore a green financing hub, and for not only Southeast Asia, but really a world leader in this space. And if that is to happen, then open, interoperable access to data that we've all been talking about today, that is at the foundation of understanding whether organizations are making tangible progress or not against their sustainability targets and ambitions, is a vital part of building confidence on the lending side, to create a virtuous flywheel to ensure that sustainable financing continues to grow at pace. And I think, as Ted has mentioned, small to medium-sized businesses are struggling to adapt and adopt and come on this journey. And so financing for them is a particularly important part of this picture as well. And large organizations typically engage with hundreds and thousands of smaller to medium-sized enterprises that have become important suppliers to them, and customers of them, and partners with them in complex supply chains. And so Greenprint at its heart is about creating a trusted and secure way for organizations to share their ESG credentials, and in due course and over time plug some of their ESG data into an open ecosystem environment. And that's a very ambitious vision, but I believe that with MAS's support, as well as the partners on like UOB, etc., and the other organizations on this call who are all engaged in Greenprint, I think it's a very exciting development. And that's that. With that in mind, we've been thrilled to contribute our learnings and thinking from our own Green Pass initiative at All into Greenprint, and that's something that we hope to continue to do as this unfolds over the coming months and years ahead.
That's amazing. This Greenprint is definitely, I think, going to be something that the industry looks forward to. Very exciting. And I do have a related question here from Rob in the audience. When we talk about Greenprint and putting that kind of performance targets or performance, ESG performance into a platform, and we are talking about ambitious, right? Something that is ambitious and pushing the envelope. What would be some examples of performance targets, Rob is asking, for sustainability loans that are considered sufficiently ambitious or not sufficiently ambitious? Right, in your experience, what have you seen?
Okay, I think that is a relatively complex question, because it pertains to, it is different for different sectors and different clients. For the more transparent sector, like the real estate, right? PCA already have certain targets, for example, and they require 80% energy efficiency by 2030. That's based on the latest master plan that they rolled out earlier this month. So if we do any SLL for building owners, where the trajectory of their targets will not achieve, that kind of expectation from the regulators, then we will not deem them to be sufficiently ambitious, and we will not be able to qualify them for SLL. For the less transparent sectors, the typical approach, as I mentioned just now, we take their historical numbers as the baseline, and then we discuss with them on their roadmap towards improvements. When we do that, we will also, based on our sectoral expertise, because we will have sectoral teams, we will also have benchmark from other clients and so on to look at. So if the client that we are engaging currently do not manifest, similarly ambitious target for the life of the loan, then again we will not be able to qualify them as having sufficiently ambitious targets. So hopefully that addressed the question in a long-winded way.
Yes, and I can imagine it's quite complex, especially if you are not looking at excluding any companies from the journey.
Maybe I can just add a very short note
yes, of course.
to that point. So this is also another area besides just the ESG computation complexity. This is also an area that we are trying to figure out how we can help the banks as well. So for us, because we're dealing with all the different SMEs, hundreds of thousands of them, we have data across different sectors, how they're performing and how the different so-called new technology are working in terms of really realizing the energy efficiencies or carbon reduction. So these data, if processed and aggregated at the correct level and shared with the relevant stakeholder, it will also be helpful in terms of determining, what is considered ambitious for that particular segment and particular technology that the company might be adopting.
Meaning that it will be relative, for example, vis-a-vis the rest of where the market is?
Yes.
Right. I do see another question here, and we're in our last 2 minutes or so, but a good question coming through from, in terms of the baseline requirements for SPTs in the next 5 to 10 years, would we then generally agree that there is a trend of it becoming a lot more stringent and higher in terms of expectations? Generally, yes.
Yeah, from the bank, definitely, because I think I echo what Paul mentioned just now, right? In this journey, he said we are still at the base camp, if we are looking at climbing the Mount Everest. And as regulators start to tighten their requirement towards their, Paris Accord commitments, the regulations will intensify. And that one classic example in Singapore, BCA already started tightening their regulations, right? So this will come, and therefore the SPTs will definitely be sharpened as we progress in the next 5 to 10 years.
And Karunia, in relation to that, for a bank's efforts, we have a question from Dave as well. Do you think eventually this ESG and green financing is going to translate into some form of impact for the bank's allocation threshold?
Yeah, actually, banks today are already required to do so, and that's why all 3 local banks actually already announced our target, right? Our ESG targets in terms of the size of our portfolio and so on, and the momentum will only accelerate, right?
And I think in Europe as well, our European banking clients are also pretty much in the same boat and actually advancing very quickly on looking at their tiered allocations in terms of their capital safeguards in relation to climate change. So that is directionally, I think I would agree that that is a trend that we should watch out for. And one last question before we do the closing remarks, really from Michael. I think Michael is asking for some opinions and views around, with the amount of startups and the number of startups coming on board for green financing, which would be the companies you feel stand out? I suppose that question is really in relation to what would be the differentiator that we are looking for in this sustainable finance space. Something that is disruptive in this sector.
Maybe
please go ahead.
Go on, Ted.
Yeah, so maybe I will start. I think this is where people are always thinking about, with green financing, with all these, the competition, the etc. But if you look at we look at the numbers, like Paul mentioned earlier, we are really at the base camp. Singapore is a relatively small country. We have 28,000 buildings. Any of our neighbors will have easily 5, 10, 20 millions of these buildings that needs to be transitioned toward carbon emission, right? And we don't have enough time to train consultants to run around to do all these kind of verifications and etc. So I think the idea of Project Ringprint and the idea of this panel is to really show that everyone has their specific role to play, and it's really about how can we get more of these data into a common platform so that we can enable more green financing to more places.
Great.
Yeah, I agree. When it comes to the specific question of startups, I think it's very dependent by industry and I think by position in the value chain. So one thing we're very focused in food and agri is various technologies around verification of what's actually occurring on the ground. And so there's some really interesting players coming through in the satellite imagery space, Silvera, Pachama, and many others. There's various players coming through in the IoT and sensor space who able to verify what's happening across the supply chain. There's one called OpenSC, which I've been quite involved with, but co-founded with World Wildlife Fund, which looks at food traceability. And then I couldn't help but mention that Allarm itself is launching some pretty impressive startups in this space. And last year we launched a business called Jiva.ag, which helps provide smart agronomic advice to smallholder farmers. And we hope that in the future will be a little bit of watch this space with what we plan on launching in the Scope 3 measurement and management space. But what we do know is that the most successful startups will be those that are interoperable and work across this ecosystem approach that's been well referenced on the call today.
That is an ambitious call. Yes. All right. Okay. I think we have come towards the end of the panel. Thanks very much, everybody. But let's close off with a round of maybe some closing remarks from the panelists, if I may. Perhaps starting with Eugene, who has been slightly quiet. Eugene, come on.
When it comes to banking and figures, this is a little bit out of my threshold. Yeah, so I think moving forward, one to realize that the governments will definitely be clamping down and tightening the regulations, and you're going to be seeing a lot of interesting designs, interesting solutions that's coming up. So it's going to be a very interesting 10 more years the decade of design and construction, as well as prop tech and fintech in this ESG space.
That's right. And for those in the audience who may not be property developers, but have financial transactions, for example, investment or underwriting, or even like lending to the real estate sector, this will be something that you need to watch out for Eugene. Karunia, yourself?
Okay, I think the lessons learned from me in the last 3-4 years journey in developing ESG solutions, essentially the importance of transparent taxonomy and regulations that incentivize adoptions. Last but not least, partnership, open partnership with ecosystem players, not just banks. So tech players definitely will be a critical partner in this journey because they provide enablers that make the whole journey easier, both for banks as well as for the corporate clients.
Agree to Paul and Ted.
I love that. I love that comment. Thank you for sharing that. And if I could just add one more to that idea, is public-private partnerships as well. I think that's what's really exciting about this MAS Greenprint vision and project is collaboration and consortium approaches across private sector, also turbocharged and enabled by public-private partnerships. So that's something that I think is a very important part of this journey.
And yeah, for me, I think, sustainability should be inclusive, right? Right now, unfortunately, many companies are being excluded and they cannot afford to play the game. And this is where we see, as mentioned, private-public partnership, and also with the help from the financial institutions like MAS to make all these sustainable finance more available so that we can include more companies in this region to be able to participate to the sustainability agenda.
Indeed, sustainable inclusivity is a worthy cause. So for KPMG as well, I think we are very excited. There are many things I suppose we would contribute our expertise to, but really for us, it is also very eye-opening because there are so much learnings that are in the space, and thanks to everybody for this open sharing. I think the audience themselves would have learned a lot as well. Thank you to MAS for facilitating. So back to you, Gabriel.
All right, and thank you, everyone. Thank you, Shireen. Thank you, our panelists, gentlemen. Very, very, very appreciative of the time you've spent today on a very rainy, cloudy, actually, Thursday, but cooling Singapore afternoon, right? And for everyone watching, that's all the time we have for today. Before you go, please don't forget to fill up the poll that will be coming up on the screen shortly. We'll appreciate if you rate our session because the feedback is very, very important to us and ultimately helps us make it better for you, the viewer. With that, we've come to the end of the Green Suit session today. We look forward to everyone joining us next week as we bring the 2020 season to a close. You can register for right now by scanning the QR code that's appearing on your screen if I'm not on my left, or was it on my right? Yeah, look at the screen to find out. On another note, tickets for the upcoming Singapore Fintech Festival are available for purchase. You can purchase them from our website by scanning the QR code as well on the screen, and also to find out more about this special learning program this year. Now, on behalf of the entire team at SFF, speakers, panelists at Green Shoes today, and the organizers, Terrence and Quixin in the background, stay safe and bye-bye.